So in this video, I'm going to take one more quick look at the euro because I think that should be the controlling currency that will determine when the dollar cycle bottoms. There was a shot that the dollar might bottom today on the FOMC meeting, but pretty much as expected, nothing of any real significance came out of that FOMC meeting. So I still think there's a decent shot that the euro may have one more little push higher, maybe to this 38% Fibonacci retracement, or maybe to this pivot here back in October at just a little over 108.7 before the daily cycle tops. So with that in mind, it's still possible that gold could still have a few more days up before we find that daily cycle top. But then once we do, the euro will have a corrective move down into a daily cycle low. We're 21 days into this cycle, so maybe we even make it to somewhere between 25 and 30 days before the cycle tops. But once it does, then we should have a corrective move. The move should be strong enough to at least break this cycle uptrend line. It should last from the top to the bottom somewhere between 5 to 8 days, and gold should pretty much mirror that move. So once the euro finds a top and gold finds a top, then 5 to 8 days down into a daily cycle low, then we get a bottom, and then we get the next leg up. So if you've taken profits, or you've cut down on your leverage or your position size, at some point here the euro is going to give us a corrective move. Gold should do the same, and then that will be your chance to buy the dip. Remember, in the advancing phase of an intermediate cycle, the profitable strategy is to buy dips and either hold on for the entire intermediate rally, or sell as close to daily cycle tops as you realistically can. We sold our leveraged positions today just in case the FOMC meeting was the trigger for the dollar to put in its cycle low. It's kind of not looking like that's going to be the case, but I did suggest not necessarily selling everything, but just converting from leveraged positions, just converting back to unleveraged positions. And if we do get another pop higher, then you can cut back on those unleveraged positions at some point, or enter some hedges to soften the blow once we get the move down into the daily cycle low. And then once that happens, then that would be the spot to re-enter the leveraged positions, because this is not done yet. Gold, it has to break the intermediate trend line, so it has to go over 1300. So here's the chart of gold. Here's the intermediate trend line. If you wanted to ignore the election night, middle of the night spike, you could actually adjust this trend line down just a little bit. Would make it a little bit easier to break this, but as I've said before, an intermediate rally needs to break the intermediate trend line. So this rally is a long way from being done yet. At this bottom, sentiment was more bearish than it was even at the bear market bottom in December, and sentiment is just like price. The further the pendulum swings to one side, the further it has to go in the other direction. So this rally has to last long enough and go far enough to swing sentiment from the extreme bearish level it was here to an extreme bullish level, and that's going to require, at a minimum, it has to break this intermediate trend line. So we've got further to go. We're gonna get, you can see already tonight, gold is starting to rally again. So we're going to break through this level at some point. Maybe it's in the next couple days, or maybe we have to wait till the next daily cycle. But either way, gold is not done with this intermediate rally. We are going to go above this trend line before this intermediate rally is done. I can virtually guarantee that. My thought is that we're probably caught in maybe a extended triangle consolidation during the rest of 2017, and it may be 2018 before we break out to the upside and then continue this this bull market in earnest. Um, the reversal on the election day was just caused too much technical damage. So we probably just aren't ready to break out and run yet. We're probably going to trade sideways for most of the year before we can break out and then make another big leg up. But there's plenty of room between where we are now and the upper uh, side of this triangle consolidation, which is what I'm expecting anyway. We'll have to see how this plays out as we go along, but it's kind of what I'm expecting. But there's still plenty of profit potential from here to there. So still plenty of money to be made this year, even if we don't get a breakout above last summer's highs in a run towards 1500 this year. Even if it runs into next year before we get the breakout, we still got plenty of profit potential this year.